All right, so it looks like we're live, Mitesh, on Facebook and YouTube. So thank you, ladies and gents, for this impromptu video. We like to call this video the Friday lunchtime Q&A. Today I'm joined by Mitesh Manik, one of our specialist mortgage and protection advisors here at our mortgage broker. Before we go to Mitesh with some question and answer session this Friday, I want to introduce you to the company itself. My name is Akil Mayer, for those of you that don't know me. I am the owner and founder of our mortgage broker. We are a real estate finance brokerage here in Berkshire with specialist advisors across England and home counties in particular. We specialize in all types of mortgages. So whether you are a first time buyer, a buy to let, portfolio landlord, or even a commercial investor, we like to know and feel the experience within the broker community that we have at OMB, and we're here to help you become a successful property entrepreneur. So, I want to introduce you to Mitesh, who is one of our specialist mortgage brokers, as I said, here at our mortgage broker. Mitesh, thanks for joining me this Friday afternoon, or coming up to a Friday afternoon.
Thanks, Akim. I think it's been long overdue since we had a video done together.
Perfect. No, it sure has. But I guess you've been as busy as I have in 2021. How was 21 for you?
It's been a cracking year, I must say. We've had lots of acquisition of new clients, some repeat business, and the trend has been lots of clients just buying lots of investment properties, if I'm being totally honest. And that's been bulk of my business.
Perfect. So are you still confident that it's going to be a positive market for 2022 as well?
Definitely. In fact, the trend this year has been more about remortgaging the existing portfolio or the main residence to raise more cash. And then again, doing the same thing like in 2021 and 2020 to just go and buy more properties.
Perfect. So before we jump onto the questions, for those of you that are joining us on Facebook as well as YouTube, feel free to drop your questions and comments in the comments box. I will do my best to answer those questions alongside Mitesh this afternoon. So please drop your comments in. Just to confirm that you can hear us, do like or put a comment in the box to say, yes, we can hear you clearly. That's always nice. We don't want to just show our ugly mugs and there's no audio coming out. So yeah, please put those comments in the box to ensure that you can hear us. So, and then also, if anybody does have any questions, feel free to drop them in the comments box. Hopefully I'll pick them up immediately. If not, Mitesh or myself will contact you directly to speak further on your mortgage or protection inquiry that you may have. So it's good to see lots of people watching us live on Facebook and on YouTube. The numbers are going up, which is nice to see, and a couple of thumbs up as well. So thank you very much for joining us. So let's get started, Mitesh. Let's put you in the hot seat and get some questions answered. So let's go for it. So first question is, what documents would I need to have ready prior to applying for a limited company buy-to-let application in particular?
Well, I'm glad you asked the question because obviously bulk of my business is looking at limited company by TED applications. And one of the things I realize is that clients sometimes contact us when they haven't yet formed a limited company. And also at the same time, I realize that they haven't yet set up their bank account. So the issue you have is that if you're not prepared in terms of not having the limited company set up with the right SIC codes as well, then what tends to happen is that at the stage when you're looking to put an offer in on a property, you'll have a lot of delays in trying to get an application in because all these things do take a lot of time. And obviously, like you do know that in order to set up a limited company, you need to obviously talk to the right individuals like an accountant who can then maybe try and guide you to ensure that you're setting up a limited company in the right way with the right shareholdings, number of directors, and the list is endless in terms of depending on how complex you want the structure to be. So I think that would be the first thing to bear in mind. At the same time, the right SIC codes. So you have to sort of make sure that you obviously contact maybe a broker initially to make sure that the setup is right and lenders are comfortable with the type of SIC codes you're looking to put on the company structure. Otherwise, again, that causes a lot of delays. Apart from that, the usual documents you normally need is your last 3 years tax calculations and tax overviews if you're a self-employed client, If you have a portfolio of properties in the background, obviously then you definitely need that because you'll be declaring the rental income on your tax return. Including that, you'd have your 3 months personal bank statements, which will show your bills for the main residence coming out, or the rental income coming in and out if you've got a portfolio in a personal name, or you may have a mixed portfolio, in some in personal name and some in limited company name, and 3 months of your business bank statements if you're running a business. So I would say that that will be the set of documents, and obviously 3 months pay slips if you're an employed person.
Perfect. Thank you for that, Mitesh. And yeah, I certainly agree with everything you said there. That's for sure. The other things that I want to just add there is in terms of the actual SIC codes that Mitesh mentioned there. The key ones are 68100 and 68209. They're fundamentally the two SIC codes that the lender will need to see sight of when you are opening the SPV. Again, make sure that you've got the structure right. Mitesh did touch on it there. Ensure that you have the right director and shareholding set up on day one. And it's key that when you're speaking to your accountant, ensure that they understand the reason why you're setting up the SPV in order to buy and hold real estate property. So work with the accountant, work with the broker, because they're going to be able to facilitate the required of funding that you require with the right lender. And what you want to do is get the structure of the company right on day one, rather than keep doing and throwing the company's house and your accountant. So fundamentally, make sure the structure is right, make sure the structure is smart, but most importantly, it's acceptable for the lender, just especially because you are looking to take out mortgages going forward. So thank you very much, Mitesh, for that.
Can I, sorry, can I just add one other area? So one of the questions I get regularly asked, and I'm not sure the viewers may have this question in the mind, but sometimes I get asked the question is, what if I have a holding company as well in the background? That's again not an issue. So if you have multiple structures of companies, there's a holding company and various other SPVs in the background, again, it's not an issue. So we can look at different complex structures as well.
Perfect. And even if you've got subsidiaries, limited company subsidiaries, part of the shareholding as well, a lot of lenders are adapting and changing their criteria because they're seeing trends in that space as well. So we understand it from a tax perspective, albeit that we're not tax advisors. However, we speak to many types of clients out there in that portfolio space. So we're then sharing that with the lender to make sure that they're actually aware of the tax advantageous styles of cooperating and structuring those. And then that's why they then agree to take on that types of structures, simply because it's not tax avoidance. That's certainly correct. Good. Next question is, why is it important to check your credit file before applying for a mortgage?
So the reason why that's really important is because you want to make sure at the outset, before the lender performs any background checks on you, because obviously when you approach a broker, they're looking to try and ensure they have all the relevant fact find details from you and the documents so that they can end up doing a decision principle or an agreement principle for you. Now, you want to make sure that before that's done, that you have the right, accurate information that the lenders are going to see when they perform a credit check. And that's why it's quite important to maybe have your credit file downloaded in advance. So one of the websites that we use is checkmyfile.com. And the reason why we use that is because it allows you to see your data with three different credit reference agencies at the same time. So that's Equifax, Experian, and TransUnion. Now, if you can imagine, if you had moved houses and you had been sent a bill by a water company just after you'd left, and for some reason you didn't realize that that bill wasn't paid or there was an error, there is a very good chance, and I had this case recently, where you look at your credit file and there might be a default registered against you maybe 2 years ago. Now, those areas you wouldn't really pick up unless you downloaded your credit file. Now, what that allows us to do is be prepared before we approach the lender. So one of the things that you can do is actually speak to either Experian or Equifax or both, depending on where the data is held, which is incorrect. You ring the company up and say, look, I need to put a notice of correction on my report because this is wrong. And so what will normally happen is that you get proof from the water company or any other utility company or a mobile phone company, and you'll have correspondence that go back and forth, and that could take time before your report gets suggested. And a lot of lenders that I speak to generally say to me, don't perform a credit check, basically don't do this in principle on our portal until you know that the report has been updated. So it's quite crucial that we get that right. And the reason why, again, it's very important is because there are some lenders out there that actually leave a hard footprint on your credit report at the time of doing a decision in principle. So it's extremely, extremely important that we try and sort of look at the report prior to applying for a mortgage. The other thing is that you also can get an idea if you're on the electoral roll. All those things sort of help if the address information is correct, and also gives you an idea of your score. So the reason why the score can be important is because some lenders, especially the high street lenders, will require you to have a particular type of score before you can get an accept decision when you perform an agreement principle on the portal. So it's quite important that those areas are sort of considered before we apply for a mortgage.
Perfect. Thank you so much. And I'd agree with everything that Mitesh said. And the other things I would want to add is when you are applying for a mortgage, fundamentally they will be doing a thorough background check because usually that is going to be the largest debt you take on in your life, as well as probably the largest direct debit that comes out of your bank account on a monthly basis. But it's good for housekeeping to ensure that you are on top of your credit profile, just certainly to make sure that no one is doing any fraud activities behind the scenes using your personal data. There's a lot of that goes on. As Mitesh said, if something is on your credit file that shouldn't be on there, is not applicable to you for whatever reason, you can put a notice of correction. But it's better to get that cleared up on day one rather than day two, which will then delay the whole mortgage application. And the other thing is that we're all very busy on our day jobs and family life and all and the alike. What I would say is if you do register with these lenders, I know lenders, sorry, these credit agencies, I should say. I know there is usually a small charge for doing so, but it does ensure that you remain up to date with your credit profile. So as I said, there's fraud alerts. Again, if you think things shouldn't be on your credit report that they shouldn't be, you can make the necessary notifications and the amendment. So, the key thing from our side actually is ensuring that we're placing your inquiry with the right mortgage lender, right, Mitesh? Because if you don't tell us in the background what's related to your profile, how do we know, right?
Exactly. And it saves a lot of time. This is the main thing. It saves a lot of time.
Yeah, and especially in the market that we're in at the moment, it's very, very competitive. You want, if something goes on the market, you have 10 viewings, and it's a race to the line who can get the mortgage first in most instances. So we will work as hard as we can for you, but it's all about working smart. And we think that we've got the right hints and tips for ensuring that we can get the mortgage for you in the correct manner, in the most seamless and time efficient manner. So thank you very much. I hope that's been helpful. We've got a couple of questions. I'm just going to jump back in here. I've got a question from Dave on Facebook. Can you repeat the SIC codes, please? Yeah, sure, Dave. It's 68100 or 68209. So they're your two SIC codes that the lender will be looking out for. You can have one or the other or both, but yeah, they're usually the ones that the lender will be looking for. Another question, Dave's another question. Will this need to be checked on all directors, including B shareholders? Mitesh, you want to add anything there?
So every lender is a bit different. What I would say is that when you go into that level of detail, it's best to sort of send an email to us outlining exactly how the structure of your companies are in terms of the holding company as well. And accordingly, we can approach the right type of lenders. I would say there's at least 3 or 4 lenders that we're more than happy to look at the structure that Dave's talking about. And then accordingly, we'll get feedback from the lender to say, can you find out more information about this area, that area? And in reality, the other good thing that happens is because we've got such a good relationship with these lenders, we get allocated a business development manager. And so what happens there is that if you turn and say that is this okay, for example, within my structure? Now, because you may have a complex structure, what they will do, they will do some checks in the background on our behalf. So they will check the lending criteria, they'll check with the underwriter in advance prior to us even approaching the lender. So I think it would be best then to set out on an email exactly how you're planning to do the structure, the share structure in terms of whether it's A and B class shares and so on, and how that's been distributed. And accordingly, if you are then planning to do something more complex over the next 6 to 12 months, it's probably best to sort of do that. So some clients prefer to have a structure that's maybe in a trust form. So if it's in a trust, again, there's some lenders that maybe can look at that as well. So it just depends on kind of what advice you've been given by the accountant. At the same time, it's better to let us know in advance what you're planning to do based on the advice you've been given, and then we'll just approach the lender in advance prior to us getting a mortgage in principle.
Yeah, I love that. Thank you. What I want to add to that is usually every shareholder with 20% or more shareholding will need to be party to the loan. There are a few lenders out there now that whether you've got 1% or even 30% shareholding, you still need to be party to the loan as well. So just be aware of that. It's not just the 20% rule of thumb that you're a shareholder of 20% or more, you need to be party. There are now lenders out there that require, even if you've got a 5% shareholding, will need to be party to the loan. And just be conscious that some lenders only allow up to two applicants per application. Some are three, some are four, some a very small number are five and six applicants as well. So we don't want to reduce the number of lenders we can go to, because what that will mean is you're going to pay premium rates for the privilege of doing so. So as Mitesh said, do contact us to ensure that the setup that you're looking to do with all these smart structures, and I like to call them smart structures because they certainly are, but what we want to do is make sure that we are not being over smart, because the lenders are not going to like it. So we've got to make sure that we meet everyone halfway. Perfect. Thanks, Dave. Hopefully that answers your question, sir. Next question, Mitesh. Can I get 100% mortgage if I don't have a sufficient deposit? Oh, 100%.
So generally speaking, in the market, you can get a 95% mortgage if it's a residential mortgage. So you can get away with a 5% deposit. There are ways and means where you can get a 100% mortgage, but it will involve your parents' security. So in terms of their main residence, the lender might take a charge against the shortfall on the deposit, and they can take either a second charge or first charge. So when I say second charge, it means basically that your parents already have a mortgage, and then the new lender that you're approaching for the mortgage will then take another charge on your parents' property for the shortfall in the difference in the deposit. So in simple terms, yes, it's possible. There are not many lenders that would look at it, but there are lenders that can. But as I said, generally 5% is sufficient. Again, when I say 5% is sufficient, some lenders do require to have a good credit score. At the same time, with a 5% deposit, you may be restricted on your salary multiplier. So you may be restricted at maybe 4.5 times or 4.75 times your gross income. So all these considerations need to be looked at. Having said that, if you've got a portfolio in the background, you can always raise obviously funds against that, and that can go towards the deposit on your on your residential mortgage. And the other way you could sort of raise the deposit is that your parents could potentially raise the funds against their property and then use those funds towards the deposit on your purchase as a gifted deposit. That's also a possibility.
Perfect. And you know what? There's lots of myths out there. Can I get a 95% mortgage? Can I get 5 times income? Can I get 6 times income? Can I do this? Can I not do this? And what I would say is there's a lot of chitter chatter out there in the market. You meet your friend at the local pub or the restaurant or whatever it be, and they're like they sell you the dream, or you can do this and you can't do this. And they might be right, they might be wrong. But what I would say is, because we're in the market, this is what we do for a living. The market is ever evolving. As Mitesh quite rightly said, the conditions, criteria, income multiples, what can a parent, a guarantor do for you to get onto the ladder, changes with every single lender, weekly, if not daily at the moment. So what I would say is, if you're unsure, or you want confidence in what you're doing, or you want advice on, even if you're forward planning for a year's time, do get in touch with us. We like to help our clients, and we talk about this in our meetings all the time. We actually find it's more of a thrill for us to help people get onto the ladder, rather than that client buying his 50th property and 60th property in their life, because they're seasoned investors, they know what they're doing, and we're there to assist with them further. But we like to help our clients, and we like to think that we go the extra mile for all our clients, no matter if you are a first-time buyer or even a seasoned investor as well. So it's all about understanding the market. As Mitesh quite rightly said, the market is super competitive at the moment. It is very, very liquid. There is certainly no credit issues in the market with lenders that we can see. Even though we've got Brexit on the way, we've got high energy prices and stuff like that going on. But from a banking perspective and from a mortgage perspective, the market is back to pre-COVID levels in terms of the number of products. Criteria is up to where it was pre-COVID. Loan to values are certainly up as well. So, it's a great position to be in, even if you wanted to borrow, even for a 2 year or 5 year, or in a 7 year fixed deal, even a 10 year fixed deal. The market is still very, very competitive. And if for those younger viewers that might be watching now, if you ask your parents who had mortgages in the 80s, interest rates were 13, 14%. Now we were able to get mortgages for 2, 3, and 4%. So, if you asked your parents at that time, they'll probably laugh you out of the block. But here we are in 2022 with rates well below 5%, which is still very, very competitive, we find. Um, Last question from my end, Mitesh. Can I
Okay.
apply for a bridging finance without a deposit?
So with bridge finance, you can get away with arranging a bridge finance without a deposit as long as you've got assets in the background.
Right.
So what I've realized is a lot of lenders that we approach for bridge finance sometimes are happy to take additional securities and do a second charge on the additional security to bridge the gap for the shortfall on deposit. So that's very much possible. But if it's a buy-to-let proposition, then at the same time, you need to be careful that if you're exiting the bridge with a buy-to-let mortgage, then we need to do the calculations at the outset to ensure that when we do the buy-to-let calculations based on the loan amount you're borrowing, it's enough to the rent's enough, the market rent's enough at the stage of completing the project for us to be able to repay the first charge debt on the property you're looking to purchase, and also the second charge debt, which will be obviously against an existing portfolio in the background. So I would say it is possible. It's on a case by case basis, but it can be done. Normally, I would say have 30% deposit available if you don't have assets in the background. That would allow you to cover the deposit requirements by the bridge finance lenders, and also the 5% allow you to cover the legal cost, stamp duty costs, valuation costs, and any other admin cost that goes with arranging bridge finance.
Perfect. And for those of you that don't know what bridging finance is, it's a short-term loan in order to bridge the gap. Hence the pun as well with bridging. So for those of you that are looking to buy a property that might not be mortgageable and habitable in its current condition, bridging finance can certainly play a pivotal part. Again, if you're looking to purchase property via an auction, I should say, and you've only got 28 days to complete, or 56 days, Mitesh might not be able to guarantee the mortgage in that time frame. However, you are very confident, Mitesh, you can get a mortgage within that time frame, right?
Yeah, you can. So there's some lenders, bridge funds lenders, actually the business development managers have come and visited us here in the office, and they said to us, look, if you've got an option finance situation, then please come to us because that's what we specialize in. So we do have lenders that we go to, especially if it's to option finance. There'll be some bridge funds lenders where we may not go to because traditionally they just take a bit longer to complete. So again, it depends on the type of transaction.
Yeah, and the other thing I want to add there is the from a legal perspective, the conveyancing for a traditional mortgage is totally different to
Yeah.
bridging conveyancing. So if you are looking at taking out bridging finance, you've got to be conscious of a couple of things. One, the legalities of it is totally different to a residential mortgage. The second thing is the costs are slightly more higher, and do be aware that you'll need to pay your own legal fees as well as the bridging lenders fees as well. So that's, again, we will talk to you about the whole process and what the costs will relate to. And as Mitesh said, if you haven't got any assets in the background that the lender can't take charges upon, then ensure that you have a 30 to 35% deposit, cash liquid available on day one, which will take care of the interest costs for the term, the lender arrangement fee, the valuation fee as well. So these are things to consider. But again, we like to do these videos ad hoc just to provide more information out there in the market. Hopefully you found that useful. Mitesh, anything you want to leave us with?
I would say that I think this year is very much about clients moving to bigger properties and becoming accidental landlords, which is what I'm realizing. So when it's accidental landlords, is where they're trying to hold on to the existing property and converting to a buy-to-let. So the terminology we use is a let to buy. So letting your property out in order to move into a bigger property as your main residence. So we're seeing lots and lots of inquiries like this. I think this is a trend this year a lot, with clients wanting to basically look at bigger size properties. It could be they're moving out of London, they want a 4 bedroom rather than three that they're currently living in, with a nice big garden, maybe a room spare to be used as an office. So I would say that this is the ideal time to get in touch with us if you're looking at remortgaging or looking to let the property out and looking to buy a new one maybe some point in the summer. So I think this is the right time to have a conversation. And I always say to my clients, prepare 6 months in advance before you decide to put your plans into practice.
Perfect, thank you. You know, one of those sayings that come to my mind: prepare to fail and fail to prepare. So I certainly agree with that. You mentioned the prepare and failing bit in that comment there. So you know, it's key that you work with the right power team. And you know, as I said, whether you are a seasoned investor, you know, you're buy to let landlord, or you want to buy your first home. Whereas Mitesh said, you might want to upsize from a 2 or 3 bed home to a 4 or 5 bed home. You know, speak to the relevant people, and the relevant people in mind come to is the local estate agents.
Yeah.
Let them know what you're looking for first and foremost. They will add you to their black book to say, Joe Blogs is looking for this property in this area. This is his price point, and leave it to that. They will then ensure that they contact you first and foremost before it hits all the portals like Rightmove and Zoopla. Alongside that, you know, let your agents know who your mortgage broker is. Well, his name's Mitesh. His number is 07956 So, you know, that sort of information is pivotal. And also show them proof of deposit. Estate agents love to know who the mortgage broker is because they can bug them and pest them. We love that. They like to know that you are good for it. So they want to see proof of deposit by way of bank statement. Let them know who your solicitor is going to be in the transaction. If you don't have a solicitor, let us know. We will appoint someone on your behalf. And what we like to do is make sure that we go to our people that we like and trust. And I like it's an old saying, but we like to do business with people that we know that we can rely on, that understand the transaction, you know, ensure that they keep up with the 5-star service that we think that we provide to our clients as well. So it's all about working smart. And I think, you know, properties are it's a lovely business to be in. I find, you know, on this side of the desk or on the investing side of the desk, or even moving home desk as well. I think it's key that as we go into 2022, there's lots of you turn on Sky News or anybody else or BBC News, and it's all doom and gloom at the moment. But again, my view is I think the market is super positive. You've got to do your homework. You've got to educate yourself before you get into any complex deals. But the beauty is now that we've got various tools that we have access to, all of us do have online, and the right power team. That let's take advantage of one another in a nice way. I mean that, and to become more of a successful property entrepreneur. Perfect. I think we're 27 minutes in. Mitesh, anything you want to leave us with? Or are you back
I would
to
just, yeah, I would just say that we provide a free initial consultation. So, there's no harm in getting in touch, 3, 6 months prior to what you're planning to do, whether it's to do the remortgage, setting up a limited company structure, with bridge finance, buying a commercial property. There's no harm having a chat. We provide, I normally have a 15-minute chat with my clients to let them know kind of what's required and prepare, in such a way that at the time when you're ready to apply for a mortgage, then you exactly know what will be required by the lender. And also at the same time, you want to make sure that you understand how the market is in terms of what rates are available for based on my credit profile, and also at the same time to make sure that the budget I've got aside for the monthly payments are realistic as well. So it's good to sort of have the initial chat. I would say don't hesitate to contact us. You've got our details. No harm in having a quick 10-15 chat, and understanding whether your plans that you've got are realistic and practical.
Perfect. Thank you so much for that. And the key takeaway there is if you've got a mortgage coming up in 2022, whether it's your home mortgage or any buy to let, please contact Mitesh to discuss your inquiry in more detail. I've left our company website there, so click on the message. You'll see Mitesh's contact details. Drop him an email, drop him a telephone line. He'll quite happily speak to you about your existing mortgages and where he can save you money potentially going forward. Mitesh, thank you so much for all your time there. I know you've got a busy afternoon ahead of you. For those of you that have watched us live, thank you so much for your likes and comments. And if anybody wants to reach out to us directly, you can do so, as I said, by email and telephone as well. We'd love to hear from you. We will be doing another video at some point next week. But again, thank you all for your support. And hopefully this short video has been useful. I wish you a lovely weekend. All the best. Bye-bye.
Thanks, Akhil.